Okay. So, ladies and gentlemen, again, on behalf of the BW Credit Union, it is my pleasure to welcome you to today's session, the first in our Smart Choices webinar series on the topic, Saving Towards a Strong Financial Future. My name is Valerie Hope, and I am the Marketing Manager of the BW Credit Union. Before I officially welcome everybody and introduce our wonderful guest speaker, let me just get going with a little housekeeping. What I shared before when I was muted, I just wanted to make sure that everybody recognized that today's session is being recorded, and that will allow us to share the recording with you after this session. Secondly, we're going to ask that everybody remains muted during the presentation so we can minimize disruptions. And we're also asking you to hold your questions to the end of the presentation. During the question and answer section, which is going to take place after the presentations, if you have a question or you want to make a comment, please just raise your hand and we will call on you to speak. Alternatively, if you're feeling a bit shy this evening, but you still want to ask a question, you can type your questions or comments into the chat box and our team is tracking them and we will ensure that they're shared with our evening speakers. So now let's get officially going. Members of the Board of Directors, members of our credit union committees, business consultant and speaker, Mr. Mark Walcott, members of our management team, fellow staff members, members of our credit union, ladies and gentlemen, good evening. On behalf of the BW Credit Union, I am very pleased to see that so many of you have taken the time to join us for what I know will be a very dynamic session on the very important topic of savings. I invite you to pay close attention to everything we're going to share this evening, starting from now, as I'm going to have a very short quiz at the end of the session, and 2 persons today will get a chance to win $100 in credit union cash from the BW Credit Union. So make sure to take in all the little nuggets and just remember some of the key information being shared. Now, for those of you who may be not as familiar with our credit union, we have been in operation since 1983. And in fact, this year we celebrated our 39th anniversary. With almost 30,000 members and just under 200 million in assets and growing, we're one of the largest member-owned financial institutions in Barbados. And presently, we have 3 convenient branches for you in Bridgetown, Speightstown, and Waston. So if you're not a member of our credit union as yet, I'm going to make a plug and just invite you to come on down to any of our branches or visit us online at www.bwuccu.com, because we have all our application forms now online. And so you can apply for membership online as well as in branch. Now, given our core mandate reflected in our slogan, "You are better with us," we remain committed to making it as easy and as stress-free as possible for all of our members to access our full range of quality financial offerings. Our approach is based on cooperative principles as a credit union, which are designed to sustain the socio-economic standard of all our members from birth to retirement. And later this evening, you're going to hear a lot more about our savings opportunities. Now, developing a consistent and early habit for savings can make a big difference in ensuring our financial freedom and allowing all of us to achieve our personal life goals. And we are truly excited to host Mark Walcott, our featured speaker today, who will impart some worthy gems to help you start and improve your savings journey. Now, Mark is a senior consultant with Norseman Consulting and has been involved in all aspects of purchasing and logistics in Barbados for over 25 years. In his various roles as a supply chain manager, he understood the importance of savings and how to cut and reduce costs and expenses. And having gained this experience, he has incorporated into his personal life and his finances. From looking at his own finances, Mark has then been able to help businesses of every size to stay profitable, teaching and showing them how to build capital, reduce costs and expenses so that they can remain profitable even in tough times. He has hosted many workshops on topics such as how to start and run a successful business, and is not about how much you make, it's about how much you get to keep. He's also worked as a consultant for the Barbados Entrepreneurial Foundation, helping individuals and businesses to develop and retain a strong financial foundation. Mark is also currently an assessor for the TVET Council on courses related to small business. He brings a passion, desire, and drive to everything he touches and is committed to helping persons to meet and surpass their goals. Ladies and gents, it's my pleasure to hand you over to Mr. Mark Walcott.
Hi, good evening, everybody.
Evening, Mark.
Thank you very much for that, Rel, that introduction. Well, let's get into the meat and the potatoes of it. As you heard what Valerie said, I've worked in a lot of fields, but I'm going to talk to you this evening on the aspect of personal finance and how I have married my personal finance and all the aspects of how businesses run their finance. And let's see if I can show you a parallel between your money and if you want to start a business, how to run your money and how business make their money, right? So I will share my screen with you. If you just bear with me a second. Okay. All right, Valerie, you're gonna have to let me share my screen.
You should be able to. Let me just see.
I'm gonna look. So while we're getting the okay on that, we here in Barbados, we talk about savings and we talk about, you know, putting down money for rainy days and everything.
Mark,
But
you can, sorry to interrupt you, but you can go ahead whenever
good to
you're
go?
ready.
Oh, okay, all right. Okay, just give me a second, ladies and gentlemen. Okay, share my screen and let me give me a second here. Let's go. All right. Okay. So I'm just going to move this. All right. So welcome to Saving for a Strong Foundation for Your Future. So as I was mentioning, saving, not hard-earned cash. You know, a lot of people will ask you, what is savings? Why, you know, we should have it. We save. There are different types of savings and who to save with and how to save effectively. Now, you will all say, well, you know, you're mature, I've been saving money before, or some people may say, well, look, you know, things are so tight, I can't even, you know, save a cent. But I'll show you this. You gotta start saving where you are. Even if it's just like a $50 a month, $50 a week, you gotta start. Once you start, it becomes very, very addictive habit. Now, I know times are hard. I work with a lot of businesses and, you know, I was in a meeting today and one of my clients was saying, well, you know, everything is going up, so we have to carry our prices, and we were in a meeting to discuss that. Now, businesses, they have it hard. People have it hard, you know, working people have it hard. Everybody has it hard, right? But this is the time where you need to buckle down. You need to plan for your future. You need to plan either for your retirement. You need to plan for your, you know, you have to get your habit of saving. Now, a man once said, you know, you can't save yourself to be a millionaire, but I don't need to save myself to be a millionaire. I just need to make sure that I am taken care of. So in this little humble course, I would like to share with you how to get certain things done. Now, you may say, well, to be honest, true, I don't have any disposable income. Well, have you thought about this? Have you thought of opening a small business? Some people like to call it a little side hustle. You know, something that you do on a weekend. Whether it be cutting your neighbor's grass or the family, you know, grass in your neighborhood and charging people for that fee. Now, I don't like cutting my grass, so I will gladly pay someone money to cut my grass. I don't like manual labor, right? So there's little things that we can do. I have a family member that they wanted to start a small business and they sell fish cakes and they sell chicken and chips and they sell waffles and chicken and stuff on Friday and Saturday. They do that, right? And it's a small side hustle. I help them with that. They can buy their and put some money down. And out of that, they were able to buy a small fridge, fridge freezer that they needed for the business. And they were also able to do things around the house and supplement. And then they started saving their money. Now, you gotta spend a little money to make a little money, but you have to start, ladies and gentlemen, right? Now, people will start, well, you know, maybe they don't want to start a side hustle, but they have a little disposable income. They may have a little bonus coming out around Christmas. Now, instead of spending bonus money at Christmas in presents, take a portion of that and start investing. You're in a perfect place here with the credit union. Start putting some of that money down. What I like to do is, like, if I was getting bonus, I used to get bonuses from the companies I used to work with, and I would take a portion of that, put that down, and then I would spend the rest. And I would always put down for a rainy day, or always put down for something that I was planning for. Let me show you a little quick example. When I was a younger man, right, my first bonus was at Cape Shepherd. No plug for them, but I used to work for them for a number of years. And I remember my working there for a whole year was $1,500. And I was like, I was really malicious to know how much I was going to get, and they said $1,500. But would you like the opportunity to buy some shares in Cape Shepherd? Well, then I'm getting $1,500. Wow, yeah, I'll buy some shares. How much can I get? We said they had a 2-for-1 deal. For every 100 shares you got 200 shares. So I bought 100 shares for $100. And I, ladies and gentlemen, forgot about them, literally. And I needed some cash. And I remembered that 10 years ago, kid you not, 10 years ago, I had bought $100 in 100 shares in Cape Shepherd. Sorry, $100 worth of shares in Cape Shepherd. I went to the Barbados Stock Exchange and asked them how much those 100 shares or 200 shares would be worth. They told me, ladies and gentlemen, $3,500. I said, oh, really? I sold the shares. Now I made a phenomenal profit. But you know what, ladies and gentlemen, what really happened? I started kicking myself all the way to the bank. Because if I had taken maybe $500, I could have walked away with $15,000. Because I had forgotten about it. That's the beauty of investment. Now, I'm not telling you to go and buy shares, but what I'm telling you to do is the little things can lead to big things. So should you risk it all? Should you play it safe? If you're, in my opinion, if you're over 40, play it safe. You don't want to pay working in a high-risk field of investment. So you play it safe. You look for easy returns, that's going to give you that return. If you're younger, under I would say 35, then long risk. The longer the risk or the higher the return for you, that's the better. So in other words, when you're younger, it pays you to have time on your side. When you get a little more mature, like me, you're more cautious, right? But time is still on your side. There is no time, ladies and gentlemen, like the present. You do it now, and do like I did all those years ago, forget about it. And then people occasionally see what's worth. So there is no quick, or there's no get rich quick scheme. They don't work, they don't pan out. I've looked at a lot of them and they really don't work. A lot of people can get burned. To me, when it comes to saving and investing, slow and steady wins the race. Moving on to our next slide. Now, making and keeping money. This for me is this is what I like to do. I like to make businesses, not just make money, but make them make money and keep money. It's almost like my credo. I keep saying it's not how much you can make. Yes, go ahead.
I'm not sure if your screen transitions are being seen. Still seeing your opening slide?
That's strange. I'm on the third slide. Okay, let me share screen. You're sharing the screen. Okay. Ladies and gentlemen, you're seeing this slide. What's the cost? Valerie, you're seeing that?
No, I'm still seeing your opening slide, but I don't know if somebody else can confirm what I'm seeing, if that's the same thing they're seeing.
I'm seeing only the opening slide.
Yeah, Mark. I think maybe you're sharing, maybe your presentation mode is in a different screen. So you might just want to confirm that where you're. presentation mode is actually what you're
Okay, let's
sharing.
try multiple participants. Everybody seen it now?
No, still not seeing it.
All
All
right, let
right,
me
this is what
stop
I'm gonna
share,
do.
come out.
Yeah.
Go ahead.
All right, you want to try sharing again? Like,
Yeah, let me try that and see if I can set it up in multiple screens.
if not, I will. Okay, yeah.
You're seeing
Planning for a future now.
for the futures?
Which I think, yeah, and so I think you just need to go up a few. Need to go up a few slides.
All right, let me see if I can back it up. Just give me a second. Stop share. All right, let me just give me a moment, ladies and gentlemen. Let's see if we can go back into that. Okay, let me just come out. Yes. It seems to, okay. Let me see where we are. Okay. Just give me a second, ladies and gentlemen.
Okay.
My screen seems to have frozen. Right. Let me put let me try again and see if we can go from there. Okay.
Okay, see in PowerPoint, you just need to put it in presentation mode.
There we go. All right, everybody's seeing.
So seeing your opening screen. So I guess
Saving for a strong foundation.
Yes.
Saving that hard-earned cash.
That's the, yep. We're with you now.
Okay. All right. Okay, let's go to what's the cost. Everybody sees that? What's the cost?
Correct.
Okay. All right. Now, investing can help you achieve your goals personally, but investing is for the long term. Saving versus saving versus investing. Now, that's a personal choice. Investing takes time and it takes patience. There are ways to do that, but you have to play, as they say, the long game in that. Most investments are profitable after 5 years, some are even more profitable after 10 years. So that's for money that you can put down and forget about. What we need to do, and that's what I had to start doing, was to get into the habit of saving. And I had to meet myself, and I have a wonderful partner who taught me how to save. I mean, my wife is very meticulous. Yes, she is an accountant, but she breaks things down, and she's really meticulous with finances, and she's very good in our businesses finances. But she taught me certain principles, and she also encouraged me to understand that saving, putting down money, you pay yourself first. And I was like, you pay yourself first? She said, yes, you always pay yourself first. You always put your savings first. And then you work out along with your budget what you need to do. Not your desires, but your needs. Supplying your needs, like your rent, your mortgage, your utilities, those are your needs. Not the brand new $400 Air Jordans that are out there. That is not a need, that is a want. Not the new latest cell phone, that is not a need. Unless your cell phone is dead, that's not a need. You put those things on the back burner because, ladies and gentlemen, we have to be financially stable. Now, there's a section here that's called emergency funds. Now, a lot of us do not really have this or have not understood this. And emergency funds are very important. They're important from the standpoint that we have to put money down for not just a rainy day, but days when it is pouring. Now, I learned this the hard way, being laid off, 6 months, unemployment. Yeah, everything was perfect. And then 7th month, I had very little money saved, and then I had to, really hustle. So I said that would not happen to me again. I started opening small businesses, and in that 6 months, I was more stable. So the second time it happened, it didn't faze me because I always had money that was there that I could lean upon, or a business that could supplement my needs. So I got into the habit of having an emergency fund, putting down money and only using it when it was pouring, not just raining, but pouring. I'm not talking about when I needed to change a tire on my car. I'm talking about when something major went wrong, or a medical bill, or something that I could not. Now, the reason being that emergency funds are very important. We just went through 24 months of COVID. We're still in it a little bit, but we went through 24 months. People started losing their jobs. There was no commerce, not just in Barbados, but worldwide. I don't have to tell you this. You lived it. And I'll be honest with you, some of the measures that government had to put in place, right, to help people, right? And you're seeing businesses go under. And I used to tell people straight, a business that was before COVID could not survive COVID. People who were financially in trouble before COVID just exacerbated the problem. So ladies and gentlemen, going forward, as we start into this slide presentation, you'll understand that you need to put down a section of money for saving, a section of money for emergency functions or emergency needs. Ladies and gentlemen, take my advice on this. Don't say you can't, say you will. Even if it's just $100, put that down. 1 and 1 makes 2. If you put down $100 every month, that's $1,200. That is a start. You also got to look at the true cost of education. We always a couple of years ago, or about a year ago, there was a lot of confusion in regards to UE and fees that UE were starting to put there, right? Because most people wanted to send their children to UE. It's up to you where you send your children, but wouldn't it be nice to understand the cost of it? When I was a young man growing up in England, I couldn't wait to leave school and get into the workforce. And it took me about 5 years to find out that, you know what, rushing into the workforce and not having documentation or papers and stuff like that, I had to go back to school, take twice as long to get where I needed to go, right? Because I was in a hurry to get to make money. But the guys that stayed at school, right, and got their certification and everything, they may have taken 2 or 3 years. They are the ones now come to salaries. So in a sense, you have to understand and balance the cost of their education. Am I going to take 3 years, get a degree, and then find a job, work with someone, or maybe open my own business? Or what a lot of my clients are coming through UE and coming through universities, and they don't want to work for anybody. They just want a little experience. They don't want to open their own business, but they have their paperwork. So you have to, find out the cost of education, and then you have to start planning for it. I plan on doing some more studying, and that's about, for myself, that's about 20,000. And I have to plan, my business has to pay for that because it's business related. I'm not just going to take that money out or get a loan for it. I'm going to put my business in such a way by saving and investing in me for my education. So there's different aspects of saving. There's different aspects of putting money down for different reasons, but we have to get into the habit. Now, ladies and gentlemen, I don't know if you really have seen what happened late last year, or I think back with the NAS, and everybody was nervous about that. Now, for me, 10 years ago, I said, no, I'm not waiting on the NAS. I am going to chart my own future. If it's there when I'm ready for it, that's great. But I'm going to start my businesses, put down my money, and I'm going to plan for my retirement. Most people would like to retire at 65. All right, when I retire at 65 and everything, that's cool. Me, I want to retire before, because I want to be in a situation where I can and enjoy what I have, what I've done. Now, you'll say, well, how do I do that? Well, you gotta start, to tell you the honest truth, to retire on your terms, you gotta start young. You have to start young. We have to teach our children that instead of buying a brand new this, invest in a piece of property. When I was 24, I invested in a piece of land. I turned and sold that land about 5 years later, and I sold it for a profit. And I took that to something else. So having property, because as my mother always says, land or a house does not devalue. It only can escalate. So you have to start planning early. But don't get nervous. Don't get, don't say, well, throw your hands up in the air and say, well, it's too late for me. No, you can start where you are. You're in a fantastic place that can help you attain your goals and your dreams and your desires. But it's going to take effort and it's going to take input from you to do so. What would you do? Haven't put anything in place, and you say, well, I have a little bit of money saved. I do have a pension coming from my company or the job that I work, right? And that's enough for me. And then you find that your insurance policy that you bought 20 years ago at $65,000 cash surrender value, $65,000 is not going to get you far now, right? So we have to look for, the future. And if you're still paying off a mortgage, you're still paying off a loan or whatnot, then that's going to impact on the type of lifestyle. So what are you going to do when your money runs out, right? What are you going to do when you live longer than you had anticipated and your money is not there? I mean, at the end of the day, you have to plan that your people are going to live longer than 65, 67. People are living into the 80s and their 90s, and you want to have a good type of life. You don't want to be struggling, or you don't want to have stress in your life. That's not the time to have it. So ladies and gentlemen, having a good retirement plan, invest in future now can give you a lot of ease further down the line. Now, at the end of the day, most people will tell you, well, I don't know how to budget. Don't be embarrassed. I used to do it the old way. Get a piece of paper, pen, write down all the expenses, and then what is left, that was savings. Now I don't do that. Savings first, savings first, put that aside, and then I will work with what I got. Needs over wants. I'm not telling you not to go out and I stopped eating, out lunch. I will carry out lunch with me when I go to clients, and when I'm finished with the client, I would eat in my car. Now, it's not I'm being cheap, but I have a goal, right? So my goal was if I could save $10 a day, that's $50 a week additional that I can put into something. My wife loves to send me shopping. When I go shopping, I'm a purchaser, right? I'm a cost controller. So I'm looking at the price on the item. I'm looking at the weight in the item. And, if it's a special, if it's on special, I'm looking for the better cuts of meat. I'm looking for the better types of fish. I'm looking for value for money. It takes nothing of us to go through a supermarket. I go through the supermarket, on my phone, I got a big long list. I'm ticking off things, looking at prices, checking prices, and I just have a conversation where we say, look, last week that was such and such. I'm buying that this week. Nope, I'm going to buy this one because this one still at the best price. And that's how we do it. Because the same way that when I'm paying for a company, treat my business, my home business, the same way. Ain't cheap. I just want to get value for money. When I bought my car when they were bringing in new cars, and that was an older type of model. It was a year old, but yet still I got it a fantastic deal. And I told the guy I want such and such and such, and he put it on. And I got it at a great deal. I got $5,000 off the sticker price. So I like to negotiate deals. Not cheap, just you have to get frugal. And you get frugal when you have your own business. There's no one writing a check for you at the end of the month. Great. You got to make sure that you hit your targets. So there's different types of budgeting methods, and you have to find what works for you. Some people like to put money in envelopes and write rent or mortgage. Some people like to put utilities or electric bill. There's nothing wrong with that. You can either do it. You can either do it that way or you can do it electronic, but you have to get into that habit. Second. Yeah, cool. All right. So, ladies and gentlemen, saving and investing are habit forming. The last thing I would like to talk to you about is setting up your budget. There's one principle I find really works well. It's called the 50-30-20 approach. 50% of your income should be put towards your needs, as in rent, mortgage, utilities, food and gas and water. Those are your needs. 30% should go towards the aspect of wants. That is an aspect of saving, putting things down that you want to save to get it. Because when you save to get it, you value it. If you know that Black Friday is coming up and you're in June, save towards that flat screen TV that you've got your eye on. Get it disciplined to save for things that you want. Don't just take up hard-earned cash that you've saved already and just go and splurge on stuff, because cash in the hand is worth cash that you're going to get next month. And the last 20%, right, is the aspect of either a retirement fund, an investment, or buying into something that will give you a return further down the line. And remember this, ladies and gentlemen, you each month, every 6 months, adjust your budget. Life will happen to you. Sometimes you may get a promotion and your budget goes up and you got more disposable income. Business, your money goes up. Adjust for that life. Something may happen, you may have a job loss, adjust for that again. And then when things are good, deal with that, enjoy that. When things aren't so good, deal with that and learn from that. For folks out there that have their own businesses, you can also look at doing this. Instead of putting down a monetary amount, when, like with my business, when things are really good and I got a lot of business coming in and I'm generating a lot of cash flow, I put down a percentage of that, a percentage of it. When things aren't so slow, I still may put down a percentage, but it's not going to be a monetary amount. It may not be a great big monetary amount. So in other words, just in the Bible, as the Bible says, when in plenty, I fast. When in fast, I tighten my belt even more, because I know that when things level out, I'm in a better position. So try and reduce the ways of spending. You waste money. Don't understand where our cash is coming in, where our cash is going out, and that little sweet spot in between is called profitability in business, or it's called savings and investment in life. Ladies and gentlemen, it has been a wild trip for me, because like there's so many things there that we can share with you, but we are on a limited time. I appreciate each and every one of you. I thank BWU for allowing me to share with you. I hope that the little bit I shared with you, but I really would like you guys to focus on the aspect of your, the savings that you can get. 1 second, please. Forgive me. If you have any questions on financial independence, you're going to have to work at that. Financial independence is something that takes time, but you can work at it. That's my goal, right? And to tell you the honest truth is, for me, I'm not a big investor. I'm more of a person. I like to see my money day to day. So I like to see what I have there, where I am, and where I am able to reach my goals, my financial goals. Ladies and gentlemen, my ultimate goal is to be financially independent. Not to be worrying about money as it comes in. I want to be in a position where my money grows for me. I'm not overly covetous of money, right? But I want to be in a position I don't have to scrunch. I've been there before. I know what it's like. And now I have my businesses running now. I'm taking my money and I'm working and I'm building for my future, but not just my future or my wife's future, but the important thing is my children's future. And I believe that if we can save and work together, we can start having generational wealth for our children and the generations to come. Ladies and gentlemen, that has been my small contribution. I pray and hope that it has helped somebody along the way. Valerie, over to you.
Thank you very much, Mark, for that interesting, informative, and very practical presentation. Hopefully, everybody here was able to collect something that they can take away that can help them start or improve their success in building your personal or even your business savings. Now, Mark did a great job in laying the foundation for why and how to save. And it's important that you know that our credit union has some excellent options to help you start and meet your savings goals. Now, before we begin our question and answer segment, I'm therefore going to invite our Chief Operations Officer, Ms. Marie Theodore, to share a brief summary of some of our savings products for you to consider. Before I invite Marie to take over the mic, let me just share a little bit of information about her. So Marie has been a professional in the financial services sector for over 15 years. She has a wealth of experience in managing investment portfolios, foreign exchange trading, merchant bank services, retail and commercial credit, as well as implementation of card products. And in her role as COO for the BW Credit Union, she oversees all aspects of our branch operations, loans, and member services. Over to you, Marie. Marie, if you are speaking, you are muted.
Sorry, I was speaking, I was on mute. Hi, good afternoon, everyone. Valerie, thanks for the introduction. And Mr. Walcott, thank you very much for your presentation. It was indeed very informational. And I know for sure that we will leave this session knowing how important it is to save. Like he said, it is never too late to save. I know some of us may have started as we were younger. Some of us enjoyed and waste money when we were younger and then got wiser when we get older. But whatever stage you are in your life, we do encourage you to make the first step in saving. With that being said, we have a wide range of products and services we want to offer you. Always remember this. You always save in something that you always invest in something that you understand. I know that there were the blessing circles that were on a while back. There are people selling you Bitcoins, investments. There are all sorts of coins out there, but I just want you to make sure that you're very prudent and you do your research and make sure that you're a well-informed investor. Now you have to make sure that you understand what you are investing in. Anything that is too good to be true, then it is not true, right? So we want to make sure that you are extremely financially prudent. As a credit union, I know a lot of people come to us for loans, but we also want to be responsible lenders. If we realize that you cannot qualify for a loan, we advise you on how to improve your finances so that you could qualify for a loan later, and also to create that good savings habit. We want to make sure that at the end of the day, like Mr. Walcott said, we create generational wealth. We want to make sure that you will have been part of a credit union movement, and then your kids, your grandkids, your siblings, cousins, anyone. We want to make sure that you take that journey with us to better financial freedom. With that being said, we have a number of savings products that we have available. They are not limited to. Valerie, you could let me know if you could see my screen.
Yes, we can see this.
Okay, perfect.
Thank you, Mark.
Right.
I was trying to unmute.
And then you can see me changing, right?
Yes, we can.
Okay, perfect. Right. So before keeping you waiting, we have several savings products available. I think I'm getting some feedback. I'm not sure. Okay, yes. We have several savings products available. We have Smart Builder, we have term deposits, we have special savings, junior accounts, safe educational fund, Smart Accumulator, Smart Living. The good thing about those, but they're not limited to those. We have our MERs ready and available to make sure that if you do call us, you could give us a call. We will be able to give you information over the phone. And after this session, late between this week and early next week, we will be sending out information about our products and services. And also you could check our website for any information. But for the purpose of this session, we want to introduce you to the 2 recently launched products that we currently have available. Those were launched back in October. One is the Smart Accumulator Plan, and the other one is the Smart Accumulator Plan, and the other one is the Smart Living Retirement Plan. Now, the Smart Accumulator Plan, what is this? It is, and again, it is something that you understand. What you see is what you get. There are no hidden terms and conditions. There is something that you will understand. That once you invest in it, well, that's something that you understand. It's not something that's complicated, like, you know, somebody come and sell you Bitcoins or anything like that. Also, too, I wanted to take note in terms of when you're planning for your retirement and when you want to save for a rainy day. I realized that a lot of persons, when they come to us, they say, well, they have insurance, a life insurance plan. No, you have to understand that if you have a life insurance plan, sometimes it may not build up enough cash for you or enough cash surrender value. For example, it's good to have a life insurance. If you have children or if you have any, any dependents that you could leave something for. And remember that it only becomes active only when you die. So if you retire, for example, you may never be able to enjoy that money. It may just accumulate a small amount of cash surrender value for you to take advantage of. So when you are talking to your insurance agents, just make sure that you're investing in a plan that accumulates as much cash as possible. If you don't have any children, if you don't have anyone to leave anything to, it will be best to invest as much as you can in your retirement. So you have to make sure that you have a plan that could accumulate as much cash. And with our plans, you could accumulate as much cash as possible. There are no hidden fees. There are no extra, there are no fine prints. So we can start with the Smart Accumulator Plan. This is a new savings plan. It is an enhanced version to the Smart Builder plan that we have. The minimum for this account is $2,500, and we go into bands. The more you save, the more you gain. Also too, we want to make sure that we encourage you to save. So it's not an account that you could come and withdraw money anytime you feel like. For example, if somebody say, let's go to Cabo this weekend, I mean, I know that you have to live your life, but sometimes you make a lot of impulsive decisions and we regret them later. So you can't say, well, you know what, I have some money saved up in this smart accumulator, so I'm just gonna take it out and just go Cabo and live my life. Like I say, like Mr. Walcott would have said earlier, you could have different types of savings for different types of goals that you have in life. So don't mix the money. If you know that this money is for retirement, this money is for a rainy day, or if, for example, this money is for when there's literally a hurricane, you make sure that you compartmentalize your money and you allocate your money monthly accordingly. So when withdrawals on the account will only be allowed in branch. So you won't be able to withdraw the money via the ATM, nor via online banking. And also too, you get only one free withdrawal a year. And if, for example, you come the second time, there is a fee associated with it. Again, like we say, we're encouraging you to save on this account, and we're offering you a better interest rate. Remember that right now the banks are not offering the best rates. I mean, the rate is literally 0.00%. You're basically paying them to keep your money for you, be the fees associated with the account monthly. So with this account, you'll be able then to earn more interest. The different bands are as follows. There is $2,500 when you get 0.75%. If you save enough, you go to $10,000. Now, with that being said, I know that the $2,500 may be a bit intimidating because somebody may be like, you know, I don't have this $2,500. Don't be dismayed by this. You know, the journey of 1,000 miles begins steps. So basically you have to start somewhere. So you could start with our Smart Builder plan, and you could start with $100, $50, whatever you can. And like everybody will tell you, once you start saving, it becomes very addictive, to the point where you may be too addicted to it. I don't want to spend any money, but saving can become very addictive, which is a good thing, because at the end of the day, you have a cushion so that if anything were to happen, that you have something to fall back on. So with that being said, you could put it in the Smart Builder plan. And when you get to the $2,500, you can put it in the Smart Accumulator plan, which will attract a higher interest rate. Then we have the Smart Living Retirement Savings Account. No, this is a bit different, because whereas the Smart Builder, you know, you build, you save, you use it as a savings account. This one, you say it is a new retirement savings account. It is an alternative to the RSP plan. I know back in the day when you look at, you could have gone your tax deductions, RSP was very popular, but now it is losing its popularity because there are tax limitations and penalties associated with that account. So we created a product called Smart Living Retirement Savings Account, where you could also put money in there towards your retirement. Like Mr. Walcott would have said, and you've seen in the news, and when it comes to NIS one, they are very concerned about the birth rate in Barbados. There may not be enough per persons to pay our NIS by the time we're ready to retire. We don't want to only depend on that. On NIS, sorry. We also want to make sure that we have something set aside. It could be, you could get pension coming from different streams, coming from NIS. You could get it from your pension fund at work if you have a good pension plan. Also, too, you could get it from your savings, from your savings, from your retirement funds, etc. So this one, it allows members to easily access their funds on account maturity without significant penalties. So once the account matures, so you could set and say, well, I want to have access to those funds when I'm 55, 60, or 65. You could call us and you could let us know, for example, you want to save $100,000 by the time you're 55. We'll be able to tell you then how much you need to invest monthly to get to that goal, because this is your goal to get to $100,000 when you are 55. Interest on this account will be paid quarterly. And also too, there is also a penalty associated with this account. We don't have it here, but Valerie, I believe it is, you're allowed maybe one withdrawal a year, and it has to be
Correct.
yeah, you allowed one withdrawal a year, and subsequently you have to pay the same $50, right, in penalty. So you could give us a call and we'll give you more information on this plan. Those are the rates that are associated with this plan. You could start as low as $100, and between $100 and $5,000, you will get 1.5%. 5,001 to 10,000, you get 1.65, and over 100,000, you get 2.25%, which is way better than what you're getting right now in the market. So we encourage you to give us a call or email us. And you could check our website if you want any more further information. We will be very much happy to go through these accounts with you and see which one best suits your needs. We also have other products and services. I know that we're encouraging people to invest in their future and build generational wealth. And also, too, one thing I want to mention is that when you have enough savings, when you have cash is always king. And whenever you listen to Warren Buffett or any of those wealthy investors, they always say that they never use their own cash if they have access to money at the bank. Now, let's say, for example, you have an emergency and so you have $10,000 saved up. Instead of you using the $10,000 for the emergency, you could come to us and get a loan within savings. For example, it attracts a much lower interest rate as if you were to get the loan unsecured, and you will be able to use the cash against cash that you've accumulated in those accounts, in the Smart Accumulator account and some other accounts that we have against the loan that you want to have. Always remember, cash is king. So I want to move on to the wide range of products and services that we offer. We have, again, the loan within savings. We have the revolving line of credits. We have green loans, and we are encouraging a lot of our members to go green. We have facilities available for renewable energy products. I know that it is one of the country's wish that we do go full eco-friendly by 2020 something, but it's fast approaching, but I hope that we get there soon. So we are making sure that we are part of this movement by helping our members go green. We offer vehicle loan, real estate loans, and also to real estate is a good way that you could accumulate wealth, and also to it's a good way if, for example, you already have your home and you want to invest in a second home. We do that also. It's a good way to get passive income when you retire, so that on top of what you're getting from your retirement fund, you also have rent money coming in, rental income coming in on a monthly basis. Remember that your expenses don't stop at retirement. A lot of persons think that because I retire, I have finished paying off my car loan, I finished paying off my mortgage, I don't have much expenses. But remember, as you get older, your health may deteriorate and you have to spend a lot of money at the doctor. So we offer other services. Like, for example, we have a group health plan. This is a very good plan. I know a lot of persons may have as one of their perks at work, they get health insurance. However, there are some that don't, especially self-employed people or persons that work in workplaces that don't offer that kind of health plan. We at the Barbados Workers Union has a members health plan where we right now we are taking in members. So there are special conditions apply. We are going to have an open enrollment for persons under 35. They come in, they fill in a form, and based on how they answer the questions, they will automatically go on the plan, or they may have to be asked to do a medical. So we are encouraging members to really call us and ask us about on the health plan, because I've seen how illness they bankrupt a lot of families. So we want to make sure that you are secure in that area. I mean, sometimes you may be even your 20s or your 30s and something happens, and then you realize that, it's too late to get health insurance. So we're encouraging everyone on this call to take this into consideration, give us a call and ask us more about our health plan. The premium, because it's a group health plan, it is as low as $112 if you're single, and if you don't have any dependents on the plan, and the rates vary based on your age and the number of dependents that you want to come on the plan. We also have our MasterCard debit card, where not only you're only able to use it locally, but you can use it internationally. You could go on Amazon, you could use it for Netflix, for eBay, anything that you want. So you can use it internationally and locally. We also have coming on, we're gonna have an online bill payments. So now if you're an existing member or potential member, you can send your full salary there, where we could allocate some of the money to your savings account, some of the money if you have a loan, and also to if you have bills to pay, you could use our online banking platform to pay your bills online. We have a very nice online banking app, and we are encouraging persons on the call, if you're a member or potential member, to take advantage of those extra services that we offer. So this is it from my end. And again, thank you for taking the time out to come to our first one of many sessions. We are looking to do a number of them over the next couple, we're gonna start doing them from now. And that is something that we think is important to educate our members about, and doing that kind of financial literacy program where we encourage our members to save, to be more financially prudent, to create generational wealth, and to also know how to manage their finances. With that being said, thank you very much, and I will see you another time.
Thank you so much for Marie for those great insights into the various financial options with our credit union. And I just want to echo what Marie said in that, you know, we have a wonderful team, happy, sitting and willing and waiting for you to come through the door, and so that they can help you, you know, get where you need to go. So what Marie didn't mention was that, you know, our team actually can provide financial counseling. So if you're somebody, you know, you know somebody who's maybe struggling, you know, they need help in terms of how to get, you know, on the financial path that they want to be on, you know, to just invite you to come in and talk to, you know, our really, you know, experienced team members, so that they can, you know, give you advice. We're not just, you know, we want to give you loans, don't get me wrong, we're not just in that business, but, you know, one of the credit union mandates is really about, you know, helping to elevate the position of our membership, and therefore we pride ourselves in terms of being able to offer that custom service. So it's now that time of the evening for our open discussion and question and answer segment. So this is now your opportunity to be able to pose, you know, your specific questions to our speakers. So I'm just going to ask my team again, just to remind you of your options. You can raise your hand and happily unmute, and we will call on you so you can pose your questions directly. Or, you know, again, if you're feeling a little quieter or shyer tonight, and you can pose your questions in the chat, and we are looking out for them so that we can pass them on to the presenters. Now, you know, as I was kind of listening to our, you know, presenters today, you know, a couple things came to mind. And so, you know, as we kind of wait for you to get your questions going, I'm going to start them off with a few questions of my own. Now, you know, one of the things that, you know, we kind of hear about is the importance of saving, and, you know, and certainly, Marie, you kind of mentioned a little bit in terms of loans within savings. Now, one of the things that we want to kind of, I guess, have a better sense of is, should we be saving up for big purchases, or should we rely mostly on credit? So either Mar or Marie, you can take that question.
Well, if I could jump in here, if it's a big ticket item, don't pull your money. Save for it, right? Save for it, because when you pull that money or you take it on credit, you're going to end up paying maybe $200, $300, maybe $500, depending on what it is over time. Time is not your friend when you take things on credit. But if you take your time and you save towards it, there's no interest on your own money. You'll only gain money when you put it down. So HP, that looks good, right? Because it's a short-term, to me, it's a short-term solution, but over the long run, it's costing you money. There's a reason why the hire purchase does so well, because it gives you the illusion that, you know, you just got to pay a little bit, but yes, you're always paying. I had an experience when I was younger, and that's what really kind of got me away from hire purchase. I remember a gentleman coming to buy something from me. So I said, well, you know, I told him the price. He said, well, that's not a problem, because I'll make that back and the person will pay me twice as much. And I was like, really? I do. He tells me that every week he goes to that person and they will give him a small amount, he'll write it down, and by the time that he has finished, they have finished their week, month, you know, all the weeks that they have to pay it, they paid twice the amount for that. And I was like, nah, that's a word to me. And I started, you know, I really shied away from hire purchase. Save for what I want, be disciplined in that way, and then in that way, my money works for me and not against me. That helps. Oh, you have a hand.
Thank you very much, Mark. Now I'm going to invite Latoya Burnham, because I can see your hand raised. You can go ahead and unmute and pose your question.
Hi, good evening. I'm hoping you're hearing me.
I can hear you, Latoya.
Okay, thanks so much. I want to say very good presentation so far. I'm enjoying the discussion and the presentations that happened. I do have a question for each of your presenters. I agree with what Mark said in relation to saving for those big items. It really comes back. And you realize how much you save when you look at the higher purchase price versus the cash price. But the question I have for Mark is in relation to retirement. One of the challenges that I have is determining exactly how much you should save for retirement, because you notice that a lot of persons in the older age group, they think that they save well for retirement, and then you encounter expenses you didn't plan for, or you save your nest egg and then you realize 5 years in, 10 years in, you're out of money. So that's the first question. How do you calculate how much you should save for your retirement? The second question.
Sorry about that, LaToya. Let me see if I can identify who's cutting it in.
You're gonna know how to tap blues, and you're gonna know how to elevate.
Yeah, okay, thanks so much. The second question is for Marie. Now, I am a member of the credit union. One of the challenges that I have with the credit union is that I'm not able to directly deposit. So for example, with my savings, I'm also in another credit union where I'm able to, as I'm paid, actually divert money from my bank account into my saving account. And I'd like to be able to do the same for the Barbados Workers Union Credit Union. And I'm wondering if that's in the plan anywhere along the way. So those are my two questions.
Okay, thank you so much for your questions, LaToya. I'm gonna let Mark respond to, how do you calculate how much you should save for retirement? And then I will let Marie answer the question as it relates to how you can direct deposit to our credit union.
It depends, right? It depends how young you are. I'm seeing now younger people are planning for their future because they want to retire early. So remember we spoke about the 50-30-20 principle. You can, if you're, I would say if you're under 35, 20% of your income, once you can afford that, you can allot to a savings policy, like what you saw there that Ms. Theodore had put up there in her slide presentation. 20% from that, and build upon that. If you're over that now, maybe coming close to paying off your house mortgage, or you're coming closer now to paying off your car note or your car loan, right? And you have more disposable income, and you can flip the 20 and the 30, and you can start putting down maybe a 40-10, whereas you don't have some, most mortgages are 25 years. If you took out your mortgage in your 30s, you're 55 now, you wouldn't have your mortgage to payment. I would take that mortgage payment and then start allotting that to your retirement, or split that between an emergency money, like an emergency fund, and then the bulk of that go to your retirement, and then look to invest that in what Ms. Theodore was sharing. Because let me tell you, I'm looking at them numbers, and then those numbers are really adding up. They're making sense. So the smart thing is to make your money over time, make you money, right? Money, people say that money doesn't grow on trees. That's a lie. Most money will grow on trees. You can either be crushed by compound interest, or you can be grown by compound interest. See it as your friend. So over time, use the compound interest. Even 2.5% is phenomenal, because the banks really aren't giving you anything. So like I said, if you're under 30, 35, 20% of your income, because you will have mortgage, you'll have a car note or whatever. When you have finished paying off that big ticket mortgage, you can flip the script and take 40% and then split that between your emergency fund and your retirement. The more you put down over a period of time, the more it will grow. And you're seeing the figures that Ms. Theodore and Ms. Hope have put together. Those are really good numbers, because your money is working for you. So like I said, 20% if you're under 35, and then you can flip the script 30 to 40% of disposable income. Once you're paying off like those big ticket items, mortgage and stuff, start investing in you and enjoy life as well. Over to you, Ms. Theodore.
Hi, good afternoon, Latoya. Thanks for your question. With regards to sending funds to us for your savings, I will try to, I can put my email address in the chat so that you can send me an email. I will send you our wire transfer information so you could send it. We use 3 different banks. I could, I think, speaking under correction. So you'll be able to send us your wire detail. We will send you a wire detail and you can send the money to us. Also, you could send money via SurePay online if you use online. If you don't want to be in a line sending us money, you could also use SurePay online. So we have different mediums that you could send funds to us. So I will put my email address. You can send me shoot me an email and then I will send you the necessary information.
Sorry, Marie, just for the purposes too of those here who maybe may not send you a direct email, if you wanted to use SurePay to send money, how would you do it?
Right, so you can either go to the physical locations. At the physical locations, you give them your member number. Once you're a member, you have to be a member. You could do that, or you could sign up with SurePay online. You could just go on the SurePay website, SurePayBarbados.com, and then you sign up, and you'll be able, you set up your account there, and we will be able to, you'll be able then to send us money once your account is set up.
Thank you for that, Marie. One thing I wanted to share with you, Latoya, as related to your question on how much money you should save for retirement. One of the things I know certainly that, I was taught was that, what you need to do is to start to calculate how much money you can live on to be comfortable when you're retired, because, most people earn, I guess, somewhere about, from pensions, approximately maybe 60 to 65% of your, I guess, last salary before you retired. So once you know that figure that you think you can, you can work with, that you can live comfortably and still, be able to kind of do what market suggested in terms of, having fun in life, then what you can always do then is you can speak with one of our, advisors in terms of what your goal is, and they'll be able to advise you as to, what kind of, monthly savings you should really kind of start to put together to really hit that goal. And of course, you want to be able to estimate, for example, we all, all want to live to, at least certainly I do want to live to 100, but in terms of, what from your age of retirement to, how you're estimated length of life, how many years that is. So for example, if you're, estimated you're going to live 20 to 30 years after retirement. And so when you calculate what you expect that you need to live on comfortably, then you can literally do the math in terms of multiplying that number, by 12 months of the year and then by 30 years to really give you a sense of overall how much money you need to save. And it can feel quite daunting. And that's why, we're trying to do what we're doing now and hopefully get to persons, when they're younger, because obviously when you're younger, it gives you more time and more room to be able to either do riskier investments, which tend to give a better return, or certainly, be able to put down more money to get towards the number that you need to. And that is certainly the whole intent behind our new retirement savings account. As Marie said, you can start with as little as $100, and you can continue to what I would say is monitor and look at where your money is going. We do offer online banking services. So if you're a member, you can sign up online. It is very easy. Just go to the website and follow the directions. And that way you're able to track your money. You can track where you're going. You don't have to come into the credit union to be able to do that. And so you can continue to kind of see what path you're going on in terms of whether you're getting close to hitting your target. Another thing that we don't talk about enough, which I want to mention here for everybody, is we actually have financial calculators on our website. And so you can go to www.bwuccu.com and you can search for our financial calculators, so there is one there for retirement as well. So again, that can give you a good sense. You can put in the amount that you're going to be saving each month. You can put an estimated interest rate, and then that gives you a sense of how much money you're able to save over a period of time. So I hope that also helps to answer your question.
Yes, thank you so much.
You are most welcome. Any other questions? See, we have a very shy group here tonight. Don't know if I'm missing any. Thank you, Adarian, and our marketing assistant has put the link to our financial calculators in the group. So whenever you can take a look at the calculators, and there are a number of different ones, including the one for retirement. And again, our team is very happy to supplement what you're doing in terms of answering any questions. As I wait for somebody to kind of pose our next question, I am going to ask actually, again, on the retirement theme, how do you actually go about formulating a strong retirement savings plan? I mean, in terms of what would you recommend? So I'm going to throw that question to Marie.
Sorry, Valerie, can you repeat the question again? I was messaging
Sure.
something in the chat. Yes.
I'm sure. I was going to say, how do you go about formulating a decent retirement savings plan? So I'm now in my mid-20s. I just got a job, and I'm clueless in terms of direction for retirement. What would you recommend?
Right. So what I would recommend, especially we could start with if you're in your 20s, is a good place to start, because most of us would have wasted a lot of money when we were in our 20s, and it's good to enjoy life. But within reason. But if you're starting your 20s, as a good place to start, then you don't have to be as aggressive as somebody starting in their 30s or in their 40s. What I would suggest to do is, one, you start with creating that discipline to save every month. Let's say, for example, you start a job, maybe you're making $2,500 a month, and maybe you want a car. Obviously, you want a car because you want to be, and it brings a lot of independence to it. You want a car, and maybe you have some bills to pay. You may live at home, you may be renting. No, you could start very conservative. You could start with 100, and then you increase as you go over time. I believe in starting small and then you go aggressive, because sometimes we set unrealistic goals, and when we don't meet them, we get discouraged and we just stop saving in all. So we have to make sure that we are very realistic in the goals that we are setting for ourselves. So as a young person, one, I will encourage you, to invest in some shares. I realized that there are a number of shares on the Barbados Stock Exchange that you could still do. On the regional stock exchange, there are brokers here that can help you even invest regionally. The Jamaican Stock Exchange is one of those emerging markets, and they're doing very well right now. Trinidad, they're a bit more active than Barbados. You could invest in shares. Also remember, you can invest in things that you don't understand. Yes, if you in your 20s, you could take more risk and you will be able to recover later, but I would suggest that you are still a bit conservative. Look at what is going on in the Bitcoin market. Now, if you're older, if you're in your 40s, then you may not be able to hold on as long as somebody that's in their 20s right now, because they're telling everybody to hold on to whatever Bitcoins they have, don't sell it, because right now people are taking advantage of it. So then if people start buying it up again, the price is gonna go up again. So all of that, you need to understand that when you're younger, you can afford to be more aggressive in your investment. Also, to not only look at investing in putting money in a fixed deposit, putting money in a retirement fund, investing in stocks and bonds, but also to look at ways that you can have residual income. Start looking to putting money aside so you can have a down payment on, let's say, doing an Airbnb, building apartments, that kind of stuff. So when you're younger and you have that drive to save, which is good, to start at a point, I mean, as young as quickly as you can, because time flies. 1 minute I was in my 20s, now I'm in my 30s. I don't know where the time went, you understand? But the point is that you have to make sure that that time is not on our side. And the older we get, the closer we get to retirement. So one, I would suggest that you start developing that savings habit by putting money every month in a bank account. Then go beyond that, start looking at retirement plan with different insurance companies, making sure that you look at you could come to us, put money with us, because you know that if you leave it at the bank, it's not going to do anything for you. all right? It's not going to do anything for you because you're not getting any returns on your investment. So you have to look in the market and see where you can go to invest. And also remember, you have to diversify your portfolio. We would love you to bring all your money and put all your retirement funds with us, but we want you to also be financially prudent. Yes, we will let you to do that, but we are telling you that you have to diversify your portfolio. So you could put some money with us, some money at other credit unions, some money with Fortress. There are Fidelity. There are different places out there. Not that I'm promoting them, but I'm trying to be unbiased here. So there are different places that you could put your money. Also remember, always look for a way to get residual income. Always look for a way, because especially if you have a normal 9 to 5, you know that is a fixed income. It doesn't go up. You know, that's what you get. So try and see if you could do something on the side. Like Mr. Walcott was saying earlier, if you like to cook, you could fry something. If you realize that there is a need to rent tents or chairs for functions, whatever it is. If you have a car, you go and get a license and get it rented out. That's residual income. If you could learn a soft skill, you could do nails, you could be a personal trainer at a gym, you could do anything you want to do, but make sure that at the end of the day, you build that residual income. I see Mr. Walker has his hands up.
Yeah, I just want to build what I wanted to talk about in regards to the diversification of your portfolio, right? Yeah, it's a matter of like the old adage, don't put all your eggs in one basket. Spread it around, see what's coming. Now, like even with the Bitcoin, a lot of Bitcoin companies took hits just recently, but like you said, they're encouraging people, don't sell now. You never sell at the bottom of a cycle. You wait till the cycle starts to come back. When you're investing, you have to play the long game. It's for some people and it's not for some people. Because if you're one of those nervous investors that you want to put your money in today and then tomorrow, 5 days later, take it back out, you're not going to make it. You have to be in it for the long run. Just to encourage you, if you're investing, only invest what you're willing to lose. Like like with the slide said, don't invest everything betting. This is a sure thing. There's no sure thing investing. Things like what the BWU is putting together, those are sure things. But I'm talking about when you work in stocks and that lot, there's no sure thing. And if someone tells you this is a sure thing, run. You've got to play the long game. You have to be patient. Having passive income, the younger you are, I would encourage you, bite the bullet. Don't go for a car, go for a house. Their mortgage rates now are more susceptible for young people. I just had this conversation a couple of weeks ago with my best friend, and he was saying like, his son, he just got a good, a higher paying job. He left one company, going to another company, and he wants to get a car. He said, he told his son, he said, listen, you have a second-hand car, deal with that, get a house. You don't have to live there. You can rent it out, have passive income, or let the rent itself pay the mortgage until you're ready for it. But yet still you've built up equity. Equity is everything in investment. Having positive equity, not having bad debt, over manageable debt or good debt is everything in investment. You have to play the long game. And looking at the products that BW have put in there, I mean, these are really, really good products now. I saw it in the chat, someone asked, how young can you start a retirement plan? I would tell you straight, if you're 21, start. If you're 19, start. If you're in a company and they're off and they say that they have a retirement thing, do this. If they're saying that they're going to hold $100 of your money for your retirement, match them $100 with the credit union. Start there. Meet yourself where you are, but start. You're never too young to start a retirement plan. And do like I did when I bought my first set of shares. It was like, wow, 10 years later, who knew? If I knew what I knew 10 years ago, I would have bought more. I would not have $1,500 and gone on partying and fair. I would have taken a big part of that and I would have invested in that and then continue to work. So even having passive income, a small business, excuse me. Oh, okay. Great, there's no starting age. Yeah, thanks. But like I said, now my specialty is small business, right? And not a plug for myself, but what I'm saying is, over COVID, we had small entrepreneurs start up in the last 24 months than the 24 months prior to COVID, because we are an entrepreneurial people. We've gotten away from the little selling snacks and sweets from our shop, our home, or washing, children going around washing cars or cutting lawns. We're industrial. When I was a young kid growing up, we hustled to get sweetie money, right? Now we have to instill that, because when there is recession or hard times, you will find more people saying, look, what gift do I have? And expand upon that gift and start a little side hustle. I had a young lady that she was working at the airport. She came to one of my classes a couple of years ago, before COVID, right? She came to the class. She learned to start up a business, and all she used to do was sell snacks and confectionery. And I looked at her and I said, listen, you have a skill for selling food. Focus on that. Oh, no, I don't want to do that. I don't want to do that. Do you know that her focusing on food now has given her not a canteen, a mini restaurant, and she does catering for parties, weddings, and fests and stuff like that. And that all came out of her getting laid off at the airport and starting a small side hustle. Ladies and gentlemen, you do not know where your future lies, but you can chart your course working with VWU and figuring out small investments, taking your time, being patient, starting a small business on the side, investing that money in yourself and in your education or whatever it is. Start believing in your future and start the generational wealth.
Thank you very much.
It's your future that is in your hands. That's my small comment.
Thank you very much, Mark. Thank you very much, Marie. There are a couple of questions in the chat, some of which were answered, but I'm just gonna pose one of the questions, Marie, just for you to take this. So we had somebody asking, Michael was asking, how often does SMART accumulator plan pay interest?
Quarterly.
So Michael, so interest is paid quarterly, and I'm if memory serves me correct, it's also paid quarterly on the retirement savings account as well, correct?
Correct.
Righty. I saw a few.
Yes, I'm sorry, Valerie. I saw another question in terms of how soon would deposit insurance be extended to credit unions? And that is I just want everyone on the call to know that is something that we are fighting for. We want to be part of the scheme. Is a matter of the powers that be put it into legislation. The Credit Union League will have had conversation with the Barbados Deposit Insurance Corporation. We're talking to the FSC. That is something that we want to see materialize and we want to see it mobilized. So that is something that we're definitely working on so that we could offer that to our members.
We also had a question in terms of our new retirement product and in terms of whether we have to pay withholding tax. And I know you did respond, but just for the purposes of those who may have not seen that question or answer, if you can let everybody know whether you pay withholding tax on our new retirement savings account.
Right. So unlike our RSP they used to have before, when you that will have attracted the 25%, I believe, tax when you redeem the funds. This one doesn't attract it. It's just a normal retirement savings plans. You accumulate your interest. And when you reach to the dedicated age, if you said that you wanted to redeem it at 55, 60 or 65, when you reach there, you get your funds, or you could reinvest it, or you could put in another plan. But no, you do not going to attract the same taxes that normal RSP will have.
Wonderful. Thank you, Marie.
Thank you.
Ladies and gentlemen, that time went so much faster than we expected. And so I want to sincerely thank everybody for your time, your attention, and your questions. And before we close, as I promised, it's now time for a little fun. And so I hope you were paying rapt attention throughout this session. As I promised, I have $200 credit union cash vouchers to give away. Just let me be clear, you cannot be working at the credit union. If you are somebody who works with our credit union and you are attending this session, unfortunately, this giveaway is not for you. This giveaway is for somebody, for any of our members or any of our members to be. And so I am going to quickly go into the first question. And again, it's really very easy. Where are the branches of the BWU Credit Union? So first person to raise your hand and answer the question, first eligible person to raise your hand and answer the question. And so again, let me repeat, where are the branches, the current branches of the BWU Credit Union?
I know where.
Sorry.
Marion.
Somebody identify, I couldn't hear.
Marion Seeley.
Marion Seeley, go ahead, Marion.
Oysters, and oysters.
Well done, Marion. Thank you. Yes, just to remind, we are located currently in our temporary locations in Trident House in Lower Broad Street. We are also in the Southern Plaza Complex. I always say near the Massey Supermarket in Oyston. And in Spicetown, we are in the Northern Business Center. So very easy to find. I think we're opposite the post office. So I invite all of you who maybe are not familiar with our credit union to come on down, visit any of our branches, and our wonderful and friendly and experienced team will be happy to help you. Now, Marion, you are the proud winner of a $100 credit union cash voucher. If you are currently a member of our credit union, we can actually have that money deposited to your account. If you are not currently a member of our credit union, please private message us your details so that we can make arrangements for you to get that voucher. Now, our second question. This one might be a little more challenging, but hopefully you're paying rapt attention. What is the name of our new retirement savings account? I'll give you a hint. It begins with SMART. Do we have any? Oh, Michael, your hand is raised. Go ahead, Michael. Sorry, Michael, if you're speaking, you're muted. We can't hear you.
I think you answered in the chat.
Okay, well, somebody, because I know the Smart Living Retirement Savings Account. Michael, you are absolutely correct. And therefore, you are our second winner of the night. So thank you so much, Marion, and thank you so much, Michael. Thank you so much, everybody. And again, please, again, same thing. If you are a member of the credit union, you'll just let us know your full name and your member account number, and we'll make arrangements to have those funds transferred. Or if you're new to our credit union, just private message us your details, and we'll make arrangements to get you that voucher that you can use to open your account with our credit union. So, ladies,
I am a member of the credit union.
Okay, wonderful, Michael. So I'm going to wait for your membership details. That was Marion, sorry?
Yeah, it's Marion. I was saying I am a member of the credit union.
Okay, Marion, thank you for letting us know. That I kind of got confused as to who unmuted there. Thank you, Marion, and thank you, Michael. So ladies and gentlemen, we are now officially at the end of today's session, and I really, me, and I'm sure me and my team members really hope that you gained much from today's session. And in the absence of a formal vote of thanks, I would like to extend sincerest gratitude to our featured speaker, Mark Walcott, for putting together such an engaging session for us this evening. Thank you, Mark. I would also like to. You're most welcome. I would also like to say thanks to our COO, Marie Theodore, for agreeing to showcase our suite of financial products for you this evening. Finally, I also want to thank each of you for coming out to today's session. Ultimately, these sessions are really about you, and they would not be successful if you did not attend. So thank you again for your attention and for your questions. Before I go, I want to invite you to continue to chat the channels of our credit union. As Marie would have shared, we plan to host some other useful financial literacy sessions in the new year. And feel free, you can message us. You can certainly share with members of our team topics that you'd be interested in us actually hosting. And if you don't already, I want to remind you, you can follow us at BWU-CCU on Facebook. We're on Instagram, we're on LinkedIn, we're on YouTube, and we're now on TikTok. So please feel free, and want to invite you to follow us on our various channels. And you can also visit again our website, www.bwuccu.com, to learn more about our products and services. And again, to remind, you can also apply for membership fully. Everything can be done online, as well as apply for any loans or financial products you'd be interested in. So thank you for being such a great audience, and we wish each of you a wonderful night.
Thank
All
you.
the best.
Thank
Farewell.
you.
Good night, everyone.
Good night.
Thank you all and good night.
Blessings, everybody.